Today's bombshell Challenger report reveals a massive drop in U.S. hirings. It's so bad, it's the weakest in over a decade. We have to go all the way back to the financial crisis to find a period it was this bad. What this is signaling is massive labor market weakness. What we're finding out is the U.S. economy is grinding to a halt, and what I fear, it's too late for what's coming. Let's turn to the headline because U.S. hiring plans job cut announcements drop in Challenger report. It actually sounds pretty good on the headline, but let's dive in. Companies last month announced plans to add 117,313 jobs, now down 71% from a year earlier and marking the weakest September for hiring intentions since 2011. The report also noted a significant slowdown in seasonal hiring plans. And so you think about the situation here as you go into a holiday, particularly when there's rising unemployment, seasonal hiring gives those who are out of work an opportunity at least to make some money. But right now, what we're facing is companies are cutting back because they already realize that demand is falling faster than expected. The issue is they already have enough workers. They don't need to add a whole lot more. And what this is, again, an indication that we're not just seeing the labor market and the economy move into equilibrium. What we're seeing is the economy is dropping off faster. Again, this is just the beginning. We're going to see more layoffs. Perhaps the holiday season will draw that to a little bit of a pause here, but I think it's going to accelerate by year end. From January through September, U.S.-based employers announced plans to add nearly 205,000 jobs. You got to go all the way back to 2009 to find a weaker print than this. And you got to think about 2009. We were coming out of a financial crisis. And arguably right now, we're on the leading side heading into a recession. So you see completely different setup here. Companies are worried. They already know the holiday season isn't going to be good. And I think it's going to be far worse than a lot of companies believe. Meanwhile, the Challenger data showed firms announced plans last month to cut 54,064 jobs. That's down nearly 26% from a year ago and fewer than the 85,979 jobs lost back in August. Now, what we do know is these planned cuts don't always translate into immediate layoffs. You're looking around 30 to 60 days on average. And this is a major issue because we just saw the PMIs, and what did we see underneath them? A lot of companies, they're saying, look, we're struggling with the tariffs. It wasn't necessarily the cost. It was just the process and management of it. They're seeing new orders drop off, export orders drop off, backlogs get worked through, and all this is going to do is lead to more and more layoffs until finally we get to the bottom. The issue is, I don't think we're anywhere close to that. And Revio Labs estimates the Bureau of Labor Statistics would have reported job growth about 38,000 in September. Now keep in mind, due to the government shutdown, we do not have the non-farm payroll report on Friday. It's going to be delayed. At some point we will get it, but there's a big problem with 38,000. That number isn't enough. Now we need about 150,000 jobs created in the payroll report just to support the economy. When you're facing nearly 2 million on continued claims, you need that number to be a whole lot higher. And what this is all indicating to me is it's too late for the labor market because everybody's hoping that something changes, something's going to turn us around. And right now, the only thing we have left is Fed rate cuts. The problem is, they're way behind the curve. Let's take a look at the total non-farm payroll in terms of change in thousands of persons in blue against the federal funds rate in red. There's two things I want you to see as we go back into the early 80s. You notice how that blue line is just coming down and crossing over that horizontal black line? Well, the black line is this zero bar. So you see at an estimate of 38,000, we're already at a critical inflection point. One, if you look at the red line, that's funds rate, you see the Fed cutting. Move forward into 1991, you see the same thing happening. As you get closer to the zero band, it's too late. Same thing happens going into the dot-com bubble. Same thing happens going to the dot-com bubble, hits the zero bar, bounces off, and then rolls over. That's what we're at now. That rollover part, we're headed negative. Same thing happened again going into the financial crisis. So the risk here is high. So far this year, employers have announced plans to cut 946,426 jobs. This is the highest for any comparable period since 2020 during the pandemic. And if you think about this, we were supposed to have a second half rebound, and companies are saying, look, we staffed up hoping the economy was going to turn around, and it didn't. So we laid some people off, and then it still didn't recover. So we're laying some more people off, and now we're facing the fact that as we head into the holiday season, consumers are already saying, look, we're not going to spend, and for good reason. Their paychecks are shrinking relative to inflation. Their hours are going to get cut even more, and this means there's going to be even more layoffs coming. Even though the labor market is getting more challenging, it's easy to make money in the markets. I want to show you this trade we put back on early September. Now, this was from our Metre strategy that has now been optimized, but check this out. We told all our subscribers to buy SMH on the open. That trade now 12.27%. Now, my friends, I want you to know how easy it is. We give you the signals. We give you the stop loss levels. All you have to do is pick your trade, place the trade, and then we update you on the stop loss levels as we go along. We couldn't make it any easier. And right now, we've made it even better. I've taken our Metre strategy, it's already changing the game, and we fully optimize it on a per security basis. To get on this trade and even more that we have coming, grab those links in the description below. Be sure to use a coupon code for your free 30-day trial. Stay tuned to the end of the show for more information, particularly if we see President Trump cut a bunch of federal workers, because right now reductions have been most notable in government, including more than 289,000 jobs related to cost-saving efforts by the Department of Government Efficiency, or DOGE. And I know there's people on both sides of this situation politically. Somebody's saying, yes, we need to lay off all these people. Others are saying no. But let's talk about this from the economy's perspective. Right now, if you look at the broad U.S. economy, it cannot absorb these workers. So regardless of what side you're on, this is going to have a real impact. Because right now, Trump plans to use the shutdown to fire federal workers this week, as White House Press Secretary Caroline Leavitt told workers that layoffs would happen, quote, within 2 days, imminent, very soon, but declined to give any detail. Right now, my friends, the risk is 750,000 federal employees are not getting paid. Now, some of them are going to work, but they're not getting paid. And the issue is, if you look at the shutdown, the longer this goes on, it's going to have a massive impact on the economy. And you also think about the timing. We've been talking about student loans. What's going to happen over the next month or two? A lot of those delinquencies that started earlier this year, well, they're going to go into an official default status. And while they could garnish wages, well, but if people don't have a job, that's not going to happen. But what about their tax return coming next year? It's going to get wiped out. So you can see as we head into holiday season, there's a lot of risk right now. The U.S. labor market is slowing down. Companies are laying off en masse. And when we hear about these planned layoffs, well, set your clock. 60 days later at the max, a lot of these people are going to be out of work. Again, the timing of this is terrible, because of what did we just hear from small businesses? A lot of them are struggling. They're laying off. And if people cut back their spending during the holiday season, what I fear is we're going to see a lot of small business lay off even more, and some outright fail. I want to share with you how we nailed that trade on SMH back in September. It came from my Metre strategy. Now, what I did is I combined 9 professional trading strategies, and I optimized it for which ones had the best entry and exit points. But we've taken it a step further. And I just want you to see how amazing it is and how easy it is for you to make money in the markets. Let's take a look at this back test on SPY. This is going back 3 years, and what we can see, total return beating a buy and hold. That's 71% return. How about the win rate? 66% of trades generated a positive return out of 69 total trades. Max drawdown, that was around 7.5%. Now, I want to show you this compared to an unoptimized strategy. This is one called the Bravo 9. You probably know my buddy Jay Bravo. Well, he says one size fits all when it comes to trading, and it doesn't. That's why he also says you can't use this on a standalone basis. You have to use a lot of other indicators. The bottom line, same back test, it doesn't work. Look at that total return, 51%. Win rate, nowhere close, half the number of trades, and same drawdown. Let's take a look, because the Metre strategy combines now 10 professional trading strategies into a single intelligent signal generator. It is targeting a 10-day hold period. So we optimize this on a per security basis to be perfect for swing trading, generating maximum potential return over a 10-day period. Now, how do you get in on this? Because again, it's so easy. We give you the signals, we give you the risk control levels. All you got to do is sign up for one of my reports. Now, on one of my reports, CTA Timer Pro, we trade against machine positioning. We look to put you in ahead of a big buy and get out before they sell. The other option you have is Momentum Timer Pro. We pair momentum, those technical indicators, with the trend. Either way, you get those reports. You get all the signals from the reports on top of right now our new optimized Metre strategy. Again, is changing the game, and you can see it in the results. It's amazing. Now, on top of that, you also get my opinions on the best trades. We give you risk control levels and update it along the way. Full tracking of all open trades and returns, a weekly update. And again, here's the best part. Whether you're brand new to trading or you've signed up for a lot of other strategies, you can compare us Absolutely no charge for 30 days. All you have to do is grab those links in the description below and be sure to use a coupon code to get your free 30-day trial. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.